Welcome back to the World Economic Forum in Davos. On this debate, we're discussing the subject, can global tax avoidance be stopped? Before the break, David Sarah was saying that transparency is what's needed here for us to understand where companies are paying their tax. Winnie Binyamini, you wanted to comment on that?
Yes, actually now I want to defend Ireland, represent Ireland. After all, I was educated by Irish nuns. But what I want to say is that what we need is not just little steps here and there. We need global cooperation on a global corporate tax reform. We can't do this, we can't stop this harmful tax competition without global cooperation. My issue is that countries got together, rich countries got together and started a BEPS process that has helped them make little fixes in their own economies for themselves to benefit from their own companies, leaving out the needs of a big part of the world, developing countries. You had in the BEPS process countries like Luxembourg, which is a tax haven, sitting there negotiating a reform, and a country like Bangladesh, like Vietnam, not having a seat at the table. So we need, and the place to do this is the United Nations, because that's where we all can sit in equality and put our interests on the table and negotiate a new tax system. So that's one. Then on transparency, I can't agree more that we need to, that's an important part of it, but it's not the end of it. Mm-hmm. Transparency is important, but you need more than that. You need rules to govern how these companies behave. Let's not forget that really we are in a system where greed is good. This is the kind of economy we are in, where companies are encouraged to maximize for shareholders, and that's why they dodge tax, and that's why they depress wages, and that's why they slash labor rights. It's all about maximizing for shareholders. So unless we really look more broadly and fix an economy that's incentivizing tax dodging, we will not solve this problem.
Pierre Moscovici, you are a European Commissioner now. You're a former French finance minister. The French president said here yesterday his plan, he wanted, companies, those big digital companies, to report how much they earn in each country so that they can pay tax on it accordingly. Is this something that the European Union can help with?
Yes, as I said, we are going to make proposals by beginning of spring in order to make sure that digital companies pay their fair share of tax, no more, no less, where they create values and profits. As far as we know, today the average taxation on those companies is 9% compared to 23% for, I would say, normal company. I'm talking about average. And there is a problem there of level playing field, which is something we can understand because our corporate tax system is 100 years old and it's not adapted to digital companies. So we are going to make ambitious proposals as well on common corporate tax base and also on specific taxation. But if I come back on the debate, first I would like to tell my two professors here that I'm not so sure that we're making little steps. I think we're making consistent steps, and that really the mode has changed, and you must not blame those who have made progress. When I speak with Pascal and with his predecessor, I can see that there is a huge change in the Irish attitude towards the European and global tax system. But I would insist on 3 points. The first one is about CCTB, about public reporting, country by country reporting, CBCR. It must be made public. I don't accept the idea that there is a contradiction between competition, investment, and transparency. You can have both. When I was finance minister in my country, I established CBCR for the French banks. Are they less competitive than the Spanish, Italian, or Portuguese or Greek banks? No. So that's the first point. We have established CBCR between administration. We need to move further. Second, there is a notion that needs to be introduced. If I look at the Apple case, the problem is not so much that the tax rate is 12.5% in Ireland. That's national sovereignty, and as you said, you don't want to add more. The problem is the effective tax rate. The tax rate which is effectively paid. If my colleague and friend Margaret Vestager raised the case, it's because she said that the effective tax rate was 0.05%.
The OECD does disagree with that. The OECD says that Ireland's effective tax rate is something just under 12%.
No. Again, there is a decision from the Commission, and even Apple took a provision, so it's for serious. So I think that what David has said finally should be taken for serious. The best way, and it's linked to CBCR, is to look at where this or that company acts and where it pays taxes. That's an economic approach, which would be, I think, as performant as the BEPS approach, because the BEPS approach is about commitments, institutions, and yes, if you look at the BEPS approach, there is no tax haven in the EU, certainly not. But if you look at the economic approach, you see that there are some countries which are, let's say, more attractive than others.
Okay, Mr. Dunphy, just come to you very quickly on that, the effective tax rate.
Well, the OECD, as you have said, have acknowledged that our tax code and tax base is different. But more importantly, from my point of view, the Revenue Commissioner in Ireland and our Controller and Auditor General, who are independent bodies who both collect tax and then assess the implementation of policy, have said that the average effective tax rate in Ireland when it comes to corporate tax rates is approximately 10%. We do not have the lowest tax rate in the European Union when it comes to corporate tax. And then we do not do deals either regionally or in policy areas of that rate.
Okay.
And that has been the bedrock of much of what we have done. But I do want to emphasise again that while I am contending very strongly the legitimate role of a policy like that to deal with the scale and size of our economy amidst a huge global marketplace, I also want to acknowledge, and I appreciate Pierre acknowledging the progress that we have made, that we do want to deal with matters to ensure we continue to be part of good and then best practice. And some of the changes that were made, and I have made many of them now myself as Minister for Finance, were made at a time when our economy was in grave difficulty. And we made those changes because it's part of what our country wants to be about, to make sure it matches up with the values of our citizens, creates jobs, and then deals with many of the matters that have been raised by the pandemic.
Sorry, and I'm speaking as a European citizen. So
I'm a European citizen too.
yes, and two nationality.
So am I.
And it now, so it's very simple. Within Irish tax code, if you have a multinational that is 100% directed outside Ireland, de facto you're not taxed. Hence, and this is the law, and I'm happy to challenge you in rule of law. So Google, 22.6 billion revenue in Europe, 2015. How much taxes they paid in Ireland? 48. Equates to 0.002. Better deal than Apple. Hence, every study, and it's the same, and I run my UCITS regulated business by the CBI in Ireland. So I'm a businessman in Ireland. It's very simple. Ireland, if you are in Ireland, you charge 12.5%. If you are someone global, you put everything there, they don't see you. Now, this has equated to more than 20 billion euro elusion per year of European taxes. Then, as a European citizen, I look at an Irish citizen. Since you've joined the European Union, Ireland had net contributed to the EU budget 150 million euro. Why are you allowing elusion, so less revenue, losses to European citizens of 20 billion? It's a ratio that is 500 times per year. When I say, and I love Ireland, and I have a business in London, and it's a great business community, tax everyone, no matter where they come from, up 12.5%. Because if you tax people at 0.002, this is a joke. And European citizens
let the Minister respond to that, and we're going to go to the mini minutes.
And we're delighted that you have your business located in Ireland, and you find it such a good environment to do business in. I cannot and will not comment on the tax affairs of any one company. It's not appropriate for me to do so as Finance Minister. I believe that companies and large corporations should pay their fair share of taxes and should pay an effective rate of tax, and I believe that needs to be done in a coordinated and global manner. And I do feel, and I think Pierre was making the case, and I do agree with him on this, that changes that we have made through the OECD, like exchange of information, like country-by-country reporting, and we haven't even touched on what's happening in America at the moment, and I suspect the professor will in a moment, could and will be part of how we make progress on matters like this.
Okay. Winnie Benjamin, I'll just let you come in because you had been looking to make a point there quickly if you can.
I just wanted to say that Turkeys don't vote for Christmas. So when there was a BEPS process and the countries sitting around the table included tax havens, they were not going to define a tax haven as themselves. So we need to have a global process where every country is at the table to make these new rules. That's, for me, what I see here. We can keep pinning Ireland on 0.00 and another one on 0, but the truth is that to curb this race to the bottom, we need global cooperation. And that is where I fault many countries, many leaders, for not taking this forward. We've been arguing this, and now there's going to be a global tax forum in New York in February. But we don't want a talk shop. We want a forum with teeth to define some new rules and to enforce cooperation in this area. And let me say, a very famous Nobel Prize-winning economist once said that the idea that lowering the corporate tax rate will spur investments is fundamentally flawed.
And
I just want to say that it is so right. There are many reasons why companies invest, not just a low tax rate.
Well, that's a perfect point to discuss what's happening in the United
said.
States. Is this a race to the bottom we're looking at?
Yeah, so let me try to first put this in a little bit broader perspective. The critical issue here are the words where value is created. And as we move into a more complex economy, it's going to be more and more difficult to answer that question. So for instance, an important part of value today is the patents. And you can move those patents anywhere in the world that you want, and you can move them to a real tax haven where it's taxed at zero. So that's why what we call the transfer price system, where you make up numbers, can't work in a globalized economy. I mean, think about what the transfer price system is supposed to be, what an arm's length transaction. So what would be the value of a shirt without a sleeve? You start thinking about a car without tires, without a chassis. There's no number you can put. So what we've created is a system that cannot work in a world of globalization. Now, within the United States, different states have have corporate tax rates, and the question is, how do you allocate where was value created? And we realized you couldn't use the transfer price system. A shirt might go back and forth across state boundaries many, many times. And so we've created a formulaic approach, which says that you have to look at the total profits, and you look at where are the employees, where is the capital, where are the sales. You have some formula. It's rough justice, but it's better than the no justice system that we have today. So, when I was in the White House 20 years ago, I said the system was broken. And it was true then, and it is now even more broken. The problem with BEPS is that it is trying to fix a broken system by the guys who are making the profits out of the system. And so they don't want to change the formula. What they've done is they've done a little bit about profit shifting through debt, a lot of fine points, but the big picture, they have not been able to address in years. Now,
well said.
The question is to expect global cooperation on this, especially when you have the tax avoiders being the main people at the table, is not something that you can expect. What I would like is Europe to take the lead and to say this, we know Europe, we know the United States under Trump, who was our tax avoiding chief, how could we expect our tax avoider in chief to be a constructor?
He's not
of
here
a
either.
global
Although he will
architecture.
be.
The answer is Europe is going to have to take the lead, and a global minimum tax imposed by Europe would be the way forward. And what that would mean would be the following. Take the transparent, you list the total profits of the corporation. You say every corporation has to pay at least 15, 20% of their revenues. You decide where the revenues were generated, but you have to pay at least 15 or 20%. That would stop the race to the bottom.
Okay.
And that would generate a lot of revenue for European citizens.
And this is a point as well that was made in a report that was commissioned for the IMF about taxing digital companies. These are two very well-respected economists as well, saying they don't believe the international tax system is fit for purpose.
Exactly.
Moscovici, Justice Stiglitz has told you you can fix everything, essentially.
Not quite, but I was smiling listening to you both criticizing BEPS because you're probably partly right, but not totally. I think that is an effort that deserves some esteem, but precisely the EU wants to go well beyond and to take the lead. That's what we try to do. That's what I try to do with Margaret Vestager. We have a teamwork. She repairs what doesn't work. I try to prepare the legislation of the future. And I will take a few examples of what we've done and can do. First, I come back to it, public CBCR. There is a proposal from the Commission on the table. I would like it to be adopted. I think that's absolutely fundamental, and I think that we need help there also from NGOs and the civil society. Second, we need to establish a modern corporate tax system, and that means two things to me. First, common corporate tax base, because the economy of today is not the economy of 1 century ago. And second, an ambitious way to tax the digital economy. And that is absolutely necessary. And fourth, everything that I try to do through this modern corporate tax system is to take into account not only the nominal tax rate, but the effective tax rate. And I welcome the fact that Pascal can work about it. We need that. And finally, on transparency, I will give you one more idea. Because if we've got effective taxation, it's the beginning of what Joe Stiglitz called for. We want also transparency from intermediaries. These are bankers, lawyers, legal advisors, financial advisors who sell aggressive tax planning schemes to clients. I'm not saying that these professions as such are bad, certainly not, but they need to be transparent. And there is a proposal also on the table which says, okay, you must make transparent to the administration of your client the tax scheme that you have sold him. I would like, and I want this proposal to be adopted. So you see, we cannot solve everything, but the EU wants to be the champion. The EU wants to be the leader. We must not only do BEPS, we must do BEPS, but plus. And that's why we have taken so many initiatives in the last 3 years.
Okay. David, Sarah, this is an issue, particularly when it comes to digital companies, the idea of the tax system just being out of date. How do you tax these companies?
It's very simple. 200 years ago, if you were Exxon and you develop a technology to suck oil, and back then oil was the key resource, you'd go in Saudi Arabia, pay a royalty. Mm-hmm. Today, data, it's the new oil. Well, I'm sorry. They're now sucking data out of each of us, and no one is getting paid. So it's very simple. If you want to suck up data, you pay your state. And that's where the country had to stand up. And why don't they do it? Because they all are part of this rigged system where for few jobs, they're all happy to take a picture with the CEO of Apple, Google, and Facebook, and Donald Trump to sell their citizen. So it's very simple. As a citizen, we must rise. And we must say, you government, protect the privacy of my data. Where are they? What corporations do with it? And as we have done for telecom, airspace, we can't touch airspace and has been auctioned. Perfect. You do the same. So anyone in private business could do it. And the reality, why aren't they doing it? Because government are colluding. It's as simple as that. Okay. And this is leading to rise in populism because the average guy on the street, it's not stupid. He gets it and he's fed up.
Winnie B. Nima, you want to go on that?
If a Spanish company is making garments, clothes in Vietnam, and selling them online and being bought in America, where is the tax paid? This is the question that Joe was talking about. We work with garment workers in countries like Vietnam, hardworking people working 80 hours a week. They pay their taxes. They live in poverty. These people, their country, where they make those clothes, needs a share of that tax in order to create that environment, the road, pay for the taxes, the roads, the electricity, the infrastructure that that country puts up that this Spanish company benefits from. So it's important to have the transparency, first of all, of the production line, where the product is made, where the capital came from, where the sale is made, and to decide on a fair way of sharing the tax so that a poor country benefits as much as possible. Then secondly, on the question of transparency, I find it strange when the argument for privacy is made by companies. They don't want us to see across how they are making their money. Almost like how I can insist on privacy that I don't take off my clothes in public. It's not the same. The last point I wanted to make is about the Europe and its leadership. I agree that Europe should lead. But as I'm saying, it's still about fairness globally. The biggest losers are poor countries. $100 billion every year is lost to developing countries because of channeling to tax havens. This is from UNCTAD. These countries cannot sit and wait for Europe to decide to lead. We need a global solution.
Professor Stiglitz, you want to go on this?
Yeah, I just want to emphasize, Winnie is absolutely right, and I want to emphasize the challenge in trying to develop a global solution to the problem, because the current framework, BEPS, is being managed through the organization of the OECD, which is an organization of advanced industrial countries, which cannot really address in an equitable way the global problems where we have to share in some way and based on some principle where value is created with the developing countries. And so the developed countries are under enormous pressure from their governments. We see it in the United States, where after it was exposed, the Apple tax avoidance, they brought the president of Apple to Congress, and they pretended nothing had happened. Aren't you the champion of America? No, you're not, because you're either depriving Europe of tax revenue or you're depriving America of tax revenue. This was, and then he had, you might say, almost the gall to say, I will bring back the money when you have a tax rate that I approve of. And it's not for individual countries to make, companies to make that decision. Now the point, the UN had a process called Finance for Development, where they recognized that development requires a lot of money. And they realized that today aid is not going to be there. And so we've invited companies to come into developing countries and said that this is going to be a source of revenue. And it hasn't proven out to be. And so the question was, how do we reform globally the tax system? And there was a discussion about the right form in which to do this. And unfortunately, the United States, supported by Europe, took the view that the tax-avoiding countries, the United States and the other countries, should be running the revised system. Yeah. And India took the view, led the developing countries, and almost all of the world agreed with India that was the way, but unfortunately, we live in a world of power where the United States won.
So thank you to all of my guests for participating in this debate from the World Economic Forum. Thank you to you at home for watching. Stay with us on France 24. But for now, goodbye from Davos.